The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome back to The Trade here on AusBiz. Before we look at the charts, let's get you caught up on what traders are looking out there. The Trump administration proceeding with probes into imports of pharmaceuticals and semiconductors as part of a bid to impose tariffs on both sectors on grounds that extensive reliance on foreign production of medicine and chips is a national security risk. Atlanta Federal Reserve Bank President Raphael Bostic says the fog of uncertainty over the Trump administration's tariffs and other policies has put the economy into a big pause where households and businesses aren't making big investments. Gold prices continuing to edge up amidst the uncertainty, oil prices settling slightly higher on exemptions for some electronics from US tariffs. And we had China's President Xi Jinping call for stronger ties with Vietnam on trade and supply chains amid the disruptions caused by the US tariffs. Let's get into the charts now, and as Warren Buffett said, a rising tide floats all boats. Only when the tide goes out do you discover who's been swimming naked. Well, what are the common challenges that traders face in this market? Mandi Rafsendjani from Trading Psychology joining me now. I don't get to say naked a lot in business news. Mandi, hi, what are we seeing?
Yeah, a lot of naked traders, I can tell you. March was really a month of extremes where I have traders who made their whole year in 1 month, and other traders literally lost their shirt, last shirt, like bombed their accounts and so on, because what worked in the past doesn't work anymore in this new market regime. And it brings really out the best and the worst in traders, where it shows where the weaknesses are. Like if your weakness has already been risk management, well, that really gets thrown into your face right now. And this is, I guess, what Warren Buffett meant, where in this market we are being shown what our weaknesses are. And I say that's a great opportunity to grow and evolve and to get better.
I mean, it's really interesting in terms of the shock waves that we saw last week, Mandi, because especially for experienced traders, they've seen the GFC, they've seen the COVID pandemic. Why do you think traders tend to panic, though, in these times rather than potentially use the volatility to their advantage?
There's so many different reasons. So one main reason, the main traders I see who are struggling are really the younger ones who haven't been through the 2008 markets, for example. We had the short COVID crashes that recovered really, really quickly, and this time there is no quick recovery. The way it looks right now, I mean, anything can happen, as we know, but that's where what worked in the past doesn't work anymore. And for example, I was working with a trader who traded in the 2nd of April, and usually beginning of the month is where the market comes back up because new money flows into the market. And he was positioned long with quite a big position because he wanted to make back the loss that he had from the previous move down. And that was the day when the Dow, I think, dropped 4,000 points or something, including the overnight session, just like crazy something. And he completely got liquidated out. What happened was, he's a really experienced, solid trader, but in that moment, because it was so new to him, he got paralyzed in fear, and then he couldn't think clearly anymore, and he started revenge trading. And, it was just, once you're on this roller coaster, it's so hard to get off.
So when we look at that roller coaster and what I said earlier about volatility potentially being opportunity, how would you suggest that some of those newer, younger traders try to thrive in an environment like this?
Yeah, so first of all, volatility is not the enemy. It's the lack of skill trading the volatility. Because I see that a lot on Twitter as well, where people are complaining about the volatility. No, that's amazing. We have to learn to think on our feet in this market because it changes so quickly. Now, the best way is to start with reducing the position size. And that's what many traders don't want to do because they look back at the chart and there's this massive move and they think, I could have made so much money, but they underestimate the range it has in the intraday move. And often, the margins have been increased as well over the weekends, a few weekends ago, and they haven't counted that into the risk management. And there's so many unknowns that they don't know how to handle. So really go down to the smallest position sizing. If go from wanting to earn to wanting to learn. And I did that in 2008. I get to the smallest position size because I was like, I can't trade this market. And at the end of the day, I came actually out on top of it positive, because I learned how to be with the market. And then, of course, money management. The risk, you have to learn to take your losses. And a lot of traders still haven't learned that. And this trader that was going long, the going long wasn't the problem. The problem was that he kept moving his stop loss until it was too late. And then we start fighting for it, right? We look for, in the next retracement, I get out, or if I could only get out for break even, we start bargaining and hoping, and that's when it's all lost. So there is no magic mindset wand. I love to say fear is good, not greed. Fear is good, because if that trader had been fearful, he hadn't done these stupid things, right? He would have reined himself right back. And it's really important to go back to your strategy. What you had an edge in the last 15 years might not be your edge anymore. You need to go back and practice. And that's what my traders do, right? They go back and they look at, what kind of risk management do I now need to use? What is my position size so that I still only lose 1% of my account? Like what used to be in the past, the 1% loss, now it's like a 4% loss because the candles are so massive. And learn from the oldies, right? So if you look at Peter Brandt, Linda Rushke, Marco Kolanovsky, Warren Buffett has been in cash for quite a while. All these people have already talked about the market not being strong and it will turn. So these guys are on Twitter and posting like world champions. You can learn so much from them. So yeah. So use it as a learning experience.
Yeah, learn from those that have been there before. You make a really good point there about what Warren Buffett has been doing. When do you think that the tide may turn in terms of people not being, so heavily in cash?
Wow, this is really difficult to say. I think this is different to 2008, because 2008 there was not as much activity on social media, and now there is so much more information. And I know from traders who have been following advice that Linda Rushke and Peter Brandt gave on Twitter. So I think the tide will turn much, much faster this time. Traders will learn faster. And we didn't have live market replay like we have now with TradingView and Soft for Forex and so on. And all my traders, I told them, go back to 2008 and trade your strategy on 2008. It was a very similar market. And then you can use that as an example or as a benchmark of what could work today and what could not work today. So hopefully they learn so much faster.
All right, lots of resources out there to learn, isn't there? Mandi, thanks so much for your time. Mandi Rafsendjani there. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.